Welcome to the 22nd edition of Silicon Valley Bank's annual State of the Wine Industry telecast. You'll get the report release after this for all those that signed up. Couple of beginning remarks. I always like to look at the people that come from around the world. It always astounds me because we started this report just really for our client base, and it's expanded over the 22 years. So today we have people from Argentina, Australia, Austria, Canada, Chile, China, France, Georgia, Germany, Netherlands, Portugal, New Zealand, Spain, South Africa, Switzerland, the UK, and of course the US and wine country, wherever you guys are. Before we get started though, a couple of housekeeping items. There's a closed captioning feature in the bottom. You can click that on. And then feel free to submit questions. We have about 10 people that are in the background from the wine division that will each be picking out questions and answering them. So you should get your questions answered. So let me introduce my panel first. Have Amy Hoops here to my right. She's Chief Revenue Officer of the Wine Group.
Glad to be here. Thank you, Rob. Thank you.
Thank you. Philana Bouvier, and she's President of Demeine Estates.
Thank you. Great to be here. Right. Aloha.
Yeah. And Dr. Paul Mabray, the Doctor of Digital.
Reuniting, it feels so good.
Yeah. I'm really excited about the, I mean, people always say, I'm so excited about this. And it's like, yeah. But I am excited about this report. It's maybe some of my better work. It's got some good parts. It's got a lot of kind of depressing parts, honestly, about industry performance. But let's just dive right into it and take a look at some of the first charts. So Pierce, if we could pull up slide 5, please. There we go. So this is one of the things that's less than good. So when you look at the industry as a whole, you can see what's been happening over a fairly long period of time. And we've talked about this in past reports, that we had a declining growth rate. Last year it was pretty mixed in terms of the analysts and who picked the volumes as negative in terms of growth last year. This year, 2022, most analysts believe we're probably, if not all, believe that we're in a negative growth market, and you know that's obviously a trend that we don't like. If we think that a rising tide floats all boats, you know, a shrinking tide doesn't float all boats. As a matter of fact, the way you start getting business is you start taking it from your neighbor. You know, it really goes to the survival of the fittest. You know, it's this Darwinian sort of business model, and it's not a place that I think any of us want to go. And so we have to get at kind of the bottom reasons of why that is. Pierce, can we pull up slide 12, please? So this is looking again at from the industry standpoint. And if you look at price points on the left side, you can see that pretty much all the price points under about $15 are shrinking. This is again by volume, and this is an industry piece of data. And on the right side, you can see everything above that is growing. As a matter of fact, the further up the price points you go, the better the growth rate is. And in my, I'm not going to say how many years now in this business, I've never seen a greater gap, a greater division between high production and premium wine business. It's big, and that number, or that break-even point between growth and not growth, continues to march forward. If I go back to about 2016, I think it was like $8.99, and it's moved forward now. Last year, I'm going to say it was 12, and then this year it's like 15. So it keeps marching forward. It's not a place again that I think any of us want to be, but it's where we are. And let's go to slide 22, please. This is, we run this net sentiment index just to get an idea of what everybody in the industry is thinking about. And this last year, I think we had, I'm going to say 630 respondents, something like that, to our survey across the United States, statistically significant sample. And this is what each of those respondents are saying. So when you look across this, the thing that people are most worried about, of course, is the economy. And the next thing is, let's see, if you move from left to right, the next thing is grape supply. It's that's -2, labor's -30, alcohol is -17, capital's -17, pardon me, foreign competition -9, substitutes 32, water availability 24, and overall, when you add all that up, it's -15. That is the worst, the biggest negative sentiment that we've seen. Now, I personally, the way I look at this, the net sentiment index, I think it's a little bit of a fear index in some respects, because you're looking at where you are right now. And so, you know, the economy, for instance, that's the thing people are worried most about. I mean, who knows where the economy is going this year? And when I do my reports, I really, you know, pretty much take that out of my mind. But this year, you know, if you had to ask me, this isn't a bank point of view, I'd say we're probably, if we're going to have recession, it's going to be mild. And we may not even have one. So that's my own point of view. But you know, that my point of view doesn't matter. As I said, it's not a bank. It's not a bank thing. But you know, the economy for us probably has less impact than and it always has. And I'll show you what happens during a recession just later if we want to take a look at that. And let's go to this last slide if we can, Pierce, 21. So all that bad news, if you want to think about it that way. So in our survey, it's mostly small wineries that we're interviewing, that we're surveying. And when you ask the small wineries last year, how did your year go? And I didn't add it up, but I think it's something around 60% said that they had a good year or better. So that doesn't sound too bad. But it kind of gets back to who you're asking again. So when you look at the bifurcation of the wine business between large producers that are struggling with delivery, and then small producers that are still growing fairly well. We'll look at some of those slides at some point through in the telecast. That's what you see right now. That's the good news for me, is that the premium wine, the fine wine, however you want to say that, the luxury wine part of the market's doing good. And I'll throw one more thing into that in terms of the good news. And this is really for the entire industry. When I look back over really since the 80s, every time we've hit a problem with the economy, a recession, we've gone into it with excess supply. And when you move into a recession with excess supply, I mean, the very first thing that happens is discounting, and you just, you know, it's kind of a race to the bottom. You got to move through your vintages. And boy, I remember the 2000 vintage as an example. This is, you know, it was released more in the .com bubble. And during that time, 2000 was a huge vintage, and it was wet. It just wasn't that great. 2001 was a very good vintage, and distribution wanted to pretty much skip by 2000, go right to 2001. And you can imagine what happened to prices back there. But this year, you know, we're coming off 3 years of light harvests. And so what we see in the cellar right now is in pretty good shape. So if we do actually hit a little bump in the road, I think we're best positioned than we've ever been to weather that storm. So that's the good news.
I like good news.
Yeah.
I like good
It's good to
news
be
too.
optimistic.
Yeah.
It's important to be
I
optimistic.
think a lot too for you to unpack. It's an awesome report this year, and I think it's super. What a great setup, because so many of the things that we've talked about for the last several years are really starting to come to fruition. Right? We've talked about the fact that we've seen these trends, and now overwhelmingly the data's here. Yep. Right? Everybody's been talking about people drink. They've been drinking better quality but less. Well, you're seeing that in that bifurcation slide, that slide 12 we looked at, right? A clear bifurcation of under 15 really having some hard years, and over 15 continuing to grow. So the data is expressing, you know, it's kind of coming to that point where it's you're forced to look at it and see it and now do something. Yeah. And I think it's also really interesting to think about, you know, that sentiment index. What was that, slide 22 that you shared? And really, that is, I agree, at some level,
Nice
a
to be
fear.
agreed with.
I got to start with agreement, and then we'll go from there.
We'll work
You
it
know,
in.
we are in such a capital-intensive industry.
Yeah.
And it is a bit of fear factor. And if capital is one of the major strains and concerns right now because of the cost of capital, we're already in a capital intensive business. So many businesses are still finding at some level a slowdown of the turn that they had. So now you're elongating the timeline of, you know, the conversion to cash and that cycle. So it just causes stress in all the other areas. Of course, economically, what's really going to happen or not, and how much of it is if we keep saying there's going to be a recession, then it comes true, you know, those kind of things. So I think it's not surprising, but it's really refreshing to see that for so many years we've talked about some trends, premiumization, we've talked about people are drinking a little less, but they're drinking better. Isn't that great for us? But I think there's, you know, for me, going back to the bifurcation, look at things, there's an opportunity or for us to not forget about how people get onboarded into the wine industry and making sure that we are working as an industry, not just as individuals, but also working with our retailers, right?
for
How
sure.
much has the shelf set changed in the last, you know, decade or two with what's even available? And so the premiumization trend was accelerated because, hey, if people are willing to spend more, I'll put more expensive items on the, you know, on the shelf. And so I think we're seeing that self-fulfilling prophecy now potentially closing down the funnel of how we bring people in. So to the very, I don't think we showed one of
detriment
the
of the
age
industry.
slides, but you know, how our cohorts are drinking and what ages. We're not seeing people come into the category, the younger, you know, consumers as quickly as they used to.
And wine should be, as we've discussed, marketed for their lifestyle. Because if you think
For
about
their lifestyle.
for their lifestyle, it should be marketed for their lifestyle.
Not lifestyle of the
because-
rich and famous.
No, but it's important because millennials are looking for more diverse. They have more diverse and prominent values, and they're more thoughtful and intentional. So our marketing has to be reflective of that, and that's important, especially in the wine industry. So as we come together in the wine industry, we need to make sure that we're doing the right things all the way from the land to our sustainability to our values, and that's what they're looking for, and it's important.
Yeah.
Well, this is our first report also since the pandemic. We're back.
Right.
We're looking at normal
Yeah.
again.
Kind
So
of.
kind of. We're
New
working.
normal.
We're working our way to the new normal. And so in the past, way, it may have felt like you were doom saying. The reality was the trends were showing themselves there. The blip of the pandemic changed our perspective. We had to,
Accelerated it.
and now we're recalibrating. And it's actually factually showing out in the data, as Amy said. It's challenging for us as an industry, but the reality is it's also opportunity because we are losing market share to other alc-bev categories. That's the facts.
Yeah.
That's the facts.
Let's, we'll get to some consumer slides because that's a really important part of the report. But you know, to your point, let's just talk slide 20 for a second about what really has happened over these last several years. So this is a slide, and it's using Nielsen data to show you what's happened with some of this channel shifting. So this is just grocery and drug outlets, and it's weekly sales. So you can see the left side, it says pre-COVID. That was a period of time where we were in a acute excess supply position, and you can see that if you look at the difference between sales, volume and value changes, you know, you have the volume, higher volume sales than value, so that you can tell, you can impute from that there was a discounting. So that's the way it worked out. And then moving into the COVID closures, you know, we're still in a really, really difficult time of doing business, and it speaks to the resilience of the industry, by the way, incredibly resilient industry. And to think what would happen, you know, during COVID, we were all afraid, including me, when we were locking down. I didn't even think you could do a pandemic. I thought that was only on movies. But you know, here we are all sitting at home. We're closing tasting rooms. We're closing restaurants. You know, what's going to happen? I had really no idea. You want to be as positive as you can, but the industry was quite resilient. And yet, when you look at this, this is again through grocery. This is everything that was moving through tasting rooms, not everything, but most, through the tasting rooms and through restaurants ended up going through the grocery and drug stores. And so sales just exploded, and that's what you're seeing in that COVID period. And then we started reopening business. Reopening business in that third section. And we went to, it flipped, right? The comps just flipped. To the extent you had a big uptick in March, that was March of 2020, when everybody broke in and was hoarding, hoarding, toilet paper and wine. That's, one of the things I say, what does toilet paper and wine have in common? Hoarding during the pandemic. And so you see, where it started to flip around. And then so we reopen, and all those volumes start to go in the negative. And then onto the far right, you can see where we have more normalized business, but there's still discounting in grocery and drug.
Nobody knew that the wine industry was going to have one of its best years during COVID, if you think about it. It was very unpredictable. No one knew that. And so if you're looking at our business and we're comparing our business to 21 to 20 and 22 to 21, it's actually unfair. Speaking from a point of view as a former wholesaler, and I speak to a lot of distributors, they will say, how as a supplier can you compare my business from 22 to 21 and expect it to be more than what it was? And so now I think the best history will be this year, 2023 versus 2022, because that's going to normalize business. If you think about what happened with retail, they brought in a lot of stock, they were overloaded, they're trying to move it, and it's been challenging for a lot of the retailers because the shelves are getting smaller.
And it really kind of depends on where you were on the continuum of small versus big, because the small wineries really weren't getting a lot of distribution anyways. So when things closed down and everything shifted back to grocery, they kind of weren't there anyway. And so, but the stuff in restaurants and the tasting rooms really, really impacted us. So 2020 was a horrible year for the small winery. And still, I would say, we're totally resilient. The industry ended up with pretty much flat sales from the premium side. And we have slides we'll maybe show you on that in a second. 2020 was for the large producers was great. As a matter of fact, that excess supply I talked about, the acute oversupply, it went away all in 2020. Sadly, a part of that was because of fires. And rolling into 2021, everything switched. So that was one of the better years probably in the last decade for most of the small producers. It was pretty incredible, and large producers struggled. And probably not surprised when you look at that bifurcation of the lower priced wines and the higher. Not all of them, but a lot of the larger high production wineries are having a more difficult time. Let's move to slide 13 if we can for a second. Pierce, thank you. Well, not the thank you slide. We're still here. Slide 13. So this is, thank you. This is combined on and off premises depletion. So this is a slide from SipSource, and I really like SipSource as a data supplier. They have both on and off premise that continue back through the pandemic. So all that channel shifting that we just talked about, it's really been hard on us analysts, by the way, to look through this and try to figure out what's really going on. And we debate and we arm wrestle, but this is probably the best piece of information that I've been able to find that talks about what happened pulling out that channel shifting. So on the left, you see restricted business conditions. On the right, business reopening. And this is one of these times where last year, when a year before, pardon me, I predicted that when we got into 2021 that we would actually have a party. And it turns out that we did have a party, but the wine industry wasn't invited. I mean, how can you have the wind at your back and end up with negative sales growth? That says something, right? There's something off. There's just something off. And you can see what's happened with spirits on the other side, the blue bar in the top. They've had some, pretty nice growth. And guess what? The wine industry is giving up. We're surrendering market share to spirits. And we're continuing to do that. Right now, the alcohol bev category is starting to come back off of that reopening blip, if you want to call it that. There's a little bit of extra stuff that had to go into restaurants, so those sales don't necessarily repeat. They start to even out. but you know, things are slowing up again.
What this slide also tells me, I mean, this is distributor and account management right here. I mean, that's what, if I look at slide 13. I mean, if you think about it, what are some of the things that really, in the early days of the wine business, what really made a wine? And it was wine by the glass. I mean, low-hanging fruit. Wine by the glass is still the best advertisement as an on-ramp getting into a restaurant. Instead of reading an ad in a restaurant, you're drinking your wine. And if you think about it, advertising is already expensive. Margins are slimmer on the wine side. They're bigger on the spirit side. So we have to face dry goods issues. We have challenges on the supplier side. But who's making the most margins right now? The distributors. So the distributors also need to assist.
You can say that now as you're not.
I can say that now. I actually, because I've been on both sides.
Yeah.
But the distributors should step in and say, you know what, as an industry, we come together and we support wine by the glass. And that's how you enter the wine. If you think about a young person going to a restaurant, enjoying it, you know, opening a wine list, the first thing they're going to look at is the wine by the glass. And that's how you start to introduce them to wine. And success should be measured through distribution, market share, and wine by the glass placements as a low-hanging, as something that we can start now. And distributors have to be more partnered with us. They don't have to make as large of a margin as they need to if they want to continue to support the wine business, especially in casual dining.
Yep. We're going to address the topics of what I call on-ramps, consumer on-ramps, in a second. But I think we probably should go to talk about some of the consumer research that came out this year. Some of this stuff has never been seen before, so it's pretty interesting. Customer Vineyard was able to work with Sovos Ship Compliant to get their full database that goes back, you know, at least to 2007, probably before, and it's 80 million transactions that are recorded through Sovos Ship Compliant. Now, the bias in this database is it's going to be larger, more expensive wines, because you can't really take a $5 wine and put it in a case and expect to cover even your shipping costs and make money on it. So it's the wines that go through, you know, through regular carriers are just going to be the more expensive ones. So that you have to remember that there's a little bit of a bias. But one of the things that I always thought when we finally could see what was happening with young consumers, were we making progress? I believed we were. I believed that we were making progress. And if we can pull up slide 4 for a second, Pierce. So this is the consumers that are broken out by age band on the right side, and then by year on the bottom. And what you can see on this is that the biggest growth segment ends up being in the 70 and 80-year-olds. Now, think about that for a second. You know, we all have talked about, you know, the boomers, the older generation that has, you know, taken wine on as that's their go-to drink. And so what's happened is the growth that we are seeing right now, that, you know, we talk about premiumization. The growth that we're seeing is actually coming from aging boomers. We're living longer. We have a, you know,
which is a good thing. Which is a good thing.
Thank God.
Well, yeah, it's,
You know,
It is a good thing. There is part of its size of population, as we know, but on the other side, I mean, the very bottom of that chart showed us that there is growth and there is wine-interested consumers, those younger legal drinking age consumers that are coming on. Slight amount of growth, but it's promising because they're interested in the industry. And so then the question is, what are we as an industry doing in order to continue to invite them and engage them? Are we offering the right items? Are they at the right price points? Are they even available for where these folks pick up their, you know, their beverage of choice?
That's right.
and I agree with you, Amy. It is about availability. We want to make sure, I mean, we don't want to abandon, just because you're 70 doesn't mean you're dead.
Well, thank you.
By the way,
Not that
it's
I'm
important.
70.
It's okay to drink for a long time. I mean, that's why I always come back to this. Wine should be marketed to their lifestyle. That's important to understand, because we're kind of just, we're saying all these negative things about how bad wine is for you, but it brings people together still. It's still a celebratory, it's about creating more, as you've said, the occasion to drink more.
I am not saying how bad wine is for you. I'm doing my part. On this slide, again, important to look, Amy skipped right down to the bottom to that one little green data point. It's 0.12 growth. It's pretty much flat, but
But it's not down.
But it's not down. That's right. It's a lot better than the 50 to 60, or more importantly, the 40 to 50-year-old,
Right.
or the 30 to 40-year-old. So that whole group of consumers is showing less interest relative to their share versus the rest of the consumers right now. So I got to ask this question. Maybe the panel can respond, but do we still have looking at this? Do we still have premiumization? I used to think premiumization was when you traded from lower price points to higher price points. You had consumers that were willing to pay more for better and better wine. And with this, I don't know. I mean, this doesn't look like premiumization to me. When I started in the industry, we had increasing volume and increasing price.
This is share of
Dollar
sales or share
this is share of dollars.
Yes,
Yeah.
share of dollars.
Yeah.
I mean, it reflects what's happening in the industry, which is what we know. But again, the average point of entry, price point, has increased dramatically. So that in and of itself is premiumization, forced premiumization, right? And then, as you said, that bifurcation slide showed us that while there's a lot more volume happening under 15, the growth is still happening over 15. Well, the growth of over 15 is happening with folks that have more discretionary income, and those are in higher age brackets.
So you're saying that wine is too expensive?
No, I think we haven't defined the luxury segment yet.
Oh,
I don't.
dang it.
I, mean,
I was trying to put her on
no,
the
if you
spot.
No,
think
I don't
about it,
think
no, it's true. Owning and expanding the luxury segment. How are we defining luxury? There are no true metrics, right? True luxury products are globally recognized and pursued by collectors, brands with global equity and a gray market presence.
But
so
that's
what
a
do we?
that's a 1%er conversation.
that is
and
just-
representing kind of,
Yes.
The rarefied air.
accessibility, right? Accessibility, and I don't disagree. You're right. However, when we talk about what's causing the major trend and why dollars are dropping faster than we'd like to see them, it's because the large volume is consumed under $15, and that's been slowing while there's still growth at above. But in total, that's too small. Luxury category, anything above 15, above 20, call it above 30 or 50. I mean, that's a lot of money. And you talk about someone making a decision with their wallet for, whether it's, the cost per ounce or the cost per drink, or if I'm only having one drink, how am I going to spend that? And what am I going to do with it? You go back to the slide about the spirits, saying that we're giving up share to spirits. I think there's a couple of things going on there, because we're still in the middle of the pandemic during that slides, right? You're talking about 21. We're not out of the pandemic yet. And people are finally just starting to go out. Well, when you go out, maybe you ordered a cocktail because you didn't make those at home. You were not feeling in the mood to craft up some cocktails during the pandemic. Most people, maybe some people pouring whiskey over the rocks, but
Homeschooling made me make
in
some
general-
cocktails.
I'm probably not
Should
the right
we,
person to
Amy?
ask.
but I think there's some of that shifting there. And then when you talk about cost per pour, I mean, when you look across beverage category in general, alcoholic and non-alcoholic, you go into the energy drinks and into kombuchas and these other places, people are willing to spend $7, $8, $10 for 12 ounces of liquid, right?
Yep.
And so it makes sense then that people should be willing to spend $15 for 25 ounces or almost 25 ounces of wine in a $7.50. However, that has shifted so quickly. It's the sticker shock, and if there's no more availability of something that speaks to me as a consumer, again, we're closing the funnel and the opportunity.
But
What
we
I-
can't decide. We can't agree on what defines premium. It could be over $8. It could be over $15.
Yeah.
It could be over $25.
Everybody's got a
It
different.
doesn't.
It's
yeah,
all
it's
different.
self.
Yeah.
That's a
And I try not to define it, because it's you kind of know it when you see it,
Right. Well,
more or
and
less. And with inflation, it changes all the time.
well, it's not relevant, right? What
me.
what my budget forwards on a Tuesday night may be different than yours,
Yep.
and then how I maybe going out on a Saturday night, what my budget is for a wine, either glass or a bottle, is different than we all have our own threshold. So premium is defined by, I think, the purchaser. It should be ultimately. We as an industry love to have it really neatly defined, and we try to put it into price categories, and that in and of itself, again, is an example of the industry, us talking to ourselves and
Right.
confusing the
It is a
consumer.
vacuum.
So the
I don't
more
want to. I don't want to lose this point though, Amy.
Sure.
On slide 4, you look at the age bands that are red.
Yep.
we have a number of, I've been talking about what we need to do to attract the young consumer. We need to engage with that young consumer. And you know, the data we have hasn't been this explicit. What this is saying is we're going backwards with that young consumer. They are less than engaged, that consumer, than they were in 2007 to today. And you know, the older consumer is still taking share from those younger consumers. You know, if we are really engaging, whatever we're doing to market, whatever we're doing to promote brands to a younger consumer, I would argue we should stop right now, because it's not helping. It's actually going backwards. So I get these questions all the time when I've talked about, you know, well, the young consumer just isn't engaging. And you have people that still to this day will say, well, they're just not old enough. You just need to wait. And I say that hope is not it's not a strategy. You know, I would rather take something into my own hands. I would rather find a way to help engage with that young consumer. And we're not. We're still talking to, you know, my generation, the boomer generation, about wine. And thank God the boomers are still buying.
Yeah. Well, in fairness,
but
though,
you can't build on a over 60 population.
agreed. But in fairness, this data is share of direct-to-consumer sales by age band.
Yeah.
Yes.
So it's where you're purchasing and
It's
how you're
skews
purchasing. So it's a bit skewed because
It is.
that entire over
But it's-
60
but
set
it's-
that's
it's-
showing
it's
growth.
the same comp.
They're buying high-end, expensive wines because they get disposable
Mm-hmm.
income, and it makes sense to buy a $80, $100, $200 bottle of wine
Mm-hmm.
direct because you're going to get shipping included, or you're like, I can't find that locally. I have to buy it, you know,
right.
on the interwebs.
Well,
so
let's-
it's
go to
it's a little
let's go to,
skewed.
also
yeah, let's
about
go to
the
slide.
flexibility.
Two quick things. I love that 30 to 60 is young right now. Just to be
you.
clear.
Yep, yep,
Secondarily, you know, this actually echoes what you said in the past about affluence and the affluence curve. I think it's still
Affluence
represents
gap,
yeah.
for the DTC, right?
Yep.
The millennials are going to be later to hit affluence. We're seeing it in the numbers now and their ability to buy DTC at the dollar amount. I don't disagree with you that we need to engage with the younger consumers in lots of ways.
Absolutely.
100%. But there are also echoes of what you've done in previous reports that are manifesting themselves in this DTC data and as a buying
Yeah.
pattern, and in real world data as well.
Yep.
Pierce, let's go to slide 7. This is so in the report you're going to find. I'm going to say there's 5 different data points, and they all pretty much say the same thing, and they're all coming at it from different levels. So if you want to look at one slide and say, well, that doesn't include this, I think you have to understand the bias of every slide, because every single piece of data
Yeah.
has bias, including the stuff that we do. It has bias, and so that's what analysts
Yep.
do is they look at the total thing.
Also, we should be serving retailers as well, in addition.
Yeah,
if you can.
and
I mean,
I
it's a
can't.
smaller sector.
I
but,
can't do
yeah.
that, but so this slide here is one that we brought up last year. So me and Danny Brager, Dale Stratton, MJ Dale got together and had Harris Poll run this poll. And again, it's striking. So if you look at the 65% and above age group, half of them say that they would bring wine to a party. That's where they have wine in their minds. If what are you going to bring to a party? Well, in my generation, it was always well, let's see. You call somebody up, you call the hostess up, and you say, what can I bring? Can I bring a salad? Can I bring a blah blah blah? And they say, no, just bring yourself. That's all you need to bring. So you say, well, heck with it. I'm bringing wine anyways. That's the way I was always trained. And so I think you see that kind of reflected in that group. But if you look all the way down, and this is Harris Poll, and it's 2,000 adults in a statistically significant survey, and it's all across the board adults. It's not just old. It's not just young. It's not just rich. Not just poor. It's it's a sweeping view of consumers, and what we see in this is there's a 20% drop from 65 and under, and that data shows up in that last slide that we look at too. There is a big drop between 60 to 50. And it shows up in every single piece of data. So let's look at slide.
There's a question from the audience that echoes what you're talking, directed to Amy here. What would your advice be? Yes, it's
to me.
from
All right.
Amanda Higgins from Ancient Peaks Winery, I think. What would be your advice to brands who are playing follow the leader in the wine marketing arena? The wine group has brands in all categories. How are you achieving success to grow your market share by category? So it's echoing what you're trying to.
Well, you can't talk about your own
Yeah, I can't talk about my own things, but I will. I'll call you later, Amanda. But the back to this slide here, I think, there's bias to everything, as you said, and absolutely, if you say, what are you going to bring to a party? A 21 to 35-year-old's thinking a party, there's a lot of people, it gets expensive to be bringing wines, am I trying to, whatever. There's some, what I also like is 65 and over, that's awesome. Over half, or about half of them are still bringing wine to party. Maybe they're trying to drink down their cellars, don't know. But most important to your point earlier with some of the preceding slides in this one is the fact that, we can't continue to just wait and that be the strategy that when the cohort at 21 to 34 here becomes, 65, maybe suddenly they'll change their behaviors. They won't. And I think that's part of the conversation, right? We talk about strategy a lot, and I think strategy is an important piece of what we should be doing, right? And hope is not a strategy. I hope it gets better. I hope they like my wine. Not a strategy. No. Nor is waiting for the 21-year-olds to get older and hope they change their behaviors.
Let's look at one more slide. So let's go to slide 8. This is a slide from the Wine Market Council. And they've been doing for a while really good work on U.S. Consumer segmentation surveys. And again, this is a wide population of consumers. And what is interesting about this slide to me is let me back up one step first. So let me define each one of them. So the very top one, core wine drinkers, they drink wine at least once a week. That's core. Marginal, they drink wine at least every 2 to 3 months. So that's not that much. I definitely over-index on that. The gray section is alcohol, not wine. They drink alcohol. They've chosen to drink alcohol, but not wine. And they drink every 2 to 3 months as well. And then you get down to infrequent. They consume less than every 2 to 3 months. And then obviously abstainers that don't consume. So you look at this, and when I first looked at it, I said, okay, well, this is super interesting because if you follow that dotted line, that gap in the dotted line, when they're young, when the consumers are young in this thing, they're saying, I'm just not into wine yet. Oh, okay, well, maybe people that are saying all we need to do is wait, maybe they have a point. Because look, these guys aren't quite into wine. And as they get older, that gray bar starts to, diminish. But when you look at the yellow and the blue slides, the core drinkers and the marginal drinkers, that's not increasing. What part of this bar is increasing? If you look, it's easiest to see in the 50 to 59 category. It's abstainers. That's not what we want either. So our waiting for the consumer is not a strategy. It's like I said, I would argue based upon all the data that I'm looking at, that if in truth we are going backwards, whatever we think we're doing, we have to stop doing it. We have to do something different.
In fairness, though, when we look at total wine consumption,
I'm being fair.
I know,
I'm being fair.
You are being fair. But if we look at the chart and you actually look at both core and marginal wine drinkers, they're gaining.
But you're looking
10
at
points of share.
No, you're looking at the 60 to 70 plus categories. I'm looking at the. I'm
looking from 21 to the end, and you look at a 25.
But you're looking at 60 and above again, and I'm drawing the line between 60 plus consumers and under, and those are young consumers, by the way, 60 and below.
Okay. All right.
So
you're saying you're growing abstainers, and
we're growing abstainers.
Wine consumers are saying flat. They're gaining 2 points.
And if you look at what's the bottom left-hand corner of that slide, this is the 2017 consumer segmentation survey versus the 2022, and here you can see it on the top two trends: 22% from 17 to 2020, it dropped to 18%. Marginal went from 19 to 15. People that don't like wine went from 26 to 29, or that aren't drinking wine, I should say. Infrequent is about flat, and abstainers have gone up 4 points. So that's in the last, from 17 to the present, and it's reflective of some of those other slides that were showing year by year decline in what we're looking for. Every single slide that I look at says the same thing. Every single slide, and so they all have bias, but they're all reporting the same thing. So,
clearly we're resonating better with above 60.
Yeah,
age
so
consumers.
so
and
what so
we
what
need
are
better
we
on-ramps.
what are we going to do about it? I mean,
Yeah.
that's really the question. I mean, where's the leadership in the industry? What are we going to do? And I put that out to the industry. What are you going to do to change this situation? Do we really want to have declining demand? We've had declining growth demand. I've been talking about it for a very long time. We need leadership. And let's talk about on-ramps, because this is what I call as an on-ramp as an example. There are a number of different ways that you can on-ramp. You know, when I go back to the 90s, when wine really took off in '94 for the boomer generation. By the way, age had nothing to do with it. It was that wine really tasted good and beer hadn't premiumized and spirits hadn't premiumized. And it was one of the best economic periods in a very, very long time. The stock market in that 10-year period, if I'm remembering right, almost grew at a pace that outgrew the rest of the stock market in history. It was a massively big run-up. So there was money, there was premium wine, and by the way, our parents were they were spirits and beer consumers. They were not wine consumers. We went away. We weren't following what our parents did, and we are starting to see that again. So let me back up one more step before I get to this. I've looked at 4 different databases now on what the young consumers are buying, because I fully believe that it's not like the young consumers are never trying wine. I mean, that's right. Silly. I mean, when you're in your experimentation mode, especially early in your drinking lives, you're experimenting with a lot of stuff. You want to know what your palate, what you like, what you don't like.
I interviewed some 21 and 22-year-olds last night at the hotel bar. They are drinking wine.
Yeah,
they're drinking but not only wine, I think is the point. So the pie's not getting bigger, the populations are getting bigger.
But that proves the point, though, is that you get younger
share.
people to try by the glass, and younger people. That is the key to one of the on-ramps.
That's one of the
is
on-ramps.
Doing by the glass at a restaurant, just like you said, you were there last night. You're talking to a bunch of young people. They're drinking wine at the bar. There are 10,000 older people dying every day, and they're not being replaced. I mean, I'm sorry.
Wow. Well, we escalated quickly.
But they're not being replaced, right? So how are you going to bring this? How are you going to replace them? And so one of the things to do, as I keep bringing back to this point, is advertising, marketing to their lifestyle, and creating more of an on-ramp, and doing it in restaurants as well as in the on-premise. Better retail strategy, which is very important, and getting distributors involved. Which I also have to say, I mean, pricing is still relevant for distributors, right? I mean, we do need to define.
For everybody.
It's still relevant, whether it's premium or luxury. It's still relevant. We do need to define it as an industry, because it is. We have a knee-jerk approach to it, which is confusing. And again, we're talking to ourselves.
Right. Well, all price categories need to have representation in the right outlets, right? So it's really matching the right wine in the right accounts to serve the needs of the consumers that are walking in and out of that account.
Right.
And I think we're seeing the changing way that consumers are shopping, right? I know some folks in the younger generation who they never go to the grocery store, right? And everything gets delivered to them. It's all on demand. It's either meals are coming, components of meals are coming, my groceries are coming, so my beverages are also showing up. And if we don't have the right amount of selection, or we don't have the opportunity for people to see and try and engage in the wines, it becomes even more difficult.
Right.
Convenience
Accessibility.
stores.
Which is where digital
So that's
comes
an
in.
on-ramp.
Yep, it's an on-ramp.
That's
Yeah.
one
Which is where
example.
digital comes in.
Yeah.
I have some questions that we need to bring in here. A lot of people are asking about healthy alternatives. Is that an issue with us, or speaking to diversity, which is a key focus that you have as well? So the healthy market, nutrition labeling,
Right.
all of that stuff, low calorie wines. There's about 20 comments in
Yeah.
there. So.
Well, I find the recent conversations around, again, trying
Natural.
to completely over segment and differentiate my wine from your wine, from this wine, from that wine. Well, mine's lower calorie. Does anybody even know how much a 5-ounce glass of
Nobody
Chardonnay has
does.
anyway?
Nobody does.
And so now we've got consumers running to seltzers. So I think, again, because as an industry, we tend to talk to ourselves and market to ourselves and compete against one another. I agree with you, Rob, that it is time for us to recognize that a lot of the success that spirits and beer have seen in getting new and keeping new consumers out there is because they have worked together as segments, as industries to have common messages and consistent approaches
Denigration
to
marketing
having
just
the
steals from
conversation.
each other. Denigration
Exactly.
marketing just steals from.
Exactly.
If I say that I have
Yeah.
less sugar than you do, and we have the same wine, that's just denigration.
Right.
marketing.
Well,
So,
and inherently, we're an agricultural
I
product,
know.
which comes from nature and is.
Yeah,
I
yeah.
mean, what's more natural, a glass of Chardonnay or a seltzer?
Well, I think it's.
Right? I mean,
I think we do know.
so-
Yeah.
we do know that one of the bigger growth categories right now is natural, the quote unquote better for you wines.
Yes.
The thing that Paul's talking about, and I wrote about it in the report, is just a personal point of view that I have. Denigration marketing is a great way to say it, but I just don't think that there is really any way that as a wine industry that we can say, as an example, my wine is natural, my wine is pure, my wine doesn't have anything in it. All those wines do. You know, now you're throwing shade in the entire category. And I think that in the end, that just puts distrust in the mind of the consumer, and it backfires.
About the entire category. Yeah.
The boats don't float.
Right,
They go
exactly.
the other direction.
Yeah.
So
Yeah.
I think it's a growth area for right now, but I think that is a losing proposition to try to market that way.
Well, and I do think health, I mean, to the question, health is a concern for many.
For sure.
And I think it is important that we as an industry state facts and shared facts that are consistent across the industry. So, speaking for me personally as a consumer, not for my company, not for anybody else, but for me as a consumer, I like when I show up at last night at the restaurant. I quite liked that all of the calorie counts were on there.
Sure.
So if I knew for every different beverage, if I could see clearly the ingredients and the calorie count, as a consumer, I'm able to make a choice then for myself.
Right.
So I
you
do
want to
think
see
that
calories, calorie count on a bottle of wine?
I think
Would
that
you?
personally, I already know what's in them, so I'm good. But no, I don't actually mind that. And truth in labeling is something that is important to the younger consumer.
Sure.
And because there's so many mixed messages, and because there are kind of infighting and the degradation marketing that's happening, well, mine's natural, theirs must not be. We can start to uncover and show.
Well, that's
And
what I think is the problem.
that's-
Let's look at
Well,
what.
it's
no
with,
harm.
But with labeling, that's going to be the problem, right? Let's just use it for mega purple.
Let's go to slide 10 because it's addressing some of these things. This is from Wine Market Council, and you're just looking at attributions of health. Now we all know that as permit holders you can't ascribe health to alcohol. So, but you can say it's if you put calories on a bottle, you can say it's low cal. If you have proteins, fat, carbohydrates, you can say it's low carb because you explain what's on the back.
Right.
So there is a benefit, by the way, of labeling because you can actually use some of those other things that ascribe themselves to health. And so I find this slide to be really interesting because when you look at the low calorie component of it, 10% said wine's in that category, 24% hard seltzer. So hard seltzer has won the low calorie battle. And the truth is we don't know, in an equal size serving what the calorie. Most consumers don't.
This would be a good survey question to everybody out there. Do people really want to see calories on a wine bottle?
And-
let's
and
just
so
ask this question. Do you want to see calories on a premium wine bottle over $80?
I do.
By the way, I'm just asking the question.
Yeah, I personally do, but that's my own point of view. When you ask this group of consumers, they're less. That's not a big deal, at least the Wine Market Council stuff. So it's a really good question, and Wine Market Council answered it. But look at the green bars down hard seltzer. Hard seltzer is actually winning the better for you over wine, and I said, how
Because
can,
they're actively disclosing calorie, carb, sugar.
pure, and you can read all the ingredients, and and they say it in fun ways like it's not refined sugar, it's naturally fermented sugar cane or something like that.
Right.
But here's look at
They're beating us in marketing.
When you ask the question straight out, is it healthier than other alcoholic beverages? All of a sudden, wine pops out as green. So here you got these other factors that play into it, but wine, a lot of people view it as healthier than other alcoholic beverages. But when you drill into this data, guess what age groups believe that?
Older.
It's older because they're the ones
They remember the 60 Minutes.
they remember
remember
French Paradox. They
Right.
remember the the dietary guidelines.
Exactly.
They remember Arthur Klatsky's work on the J-shaped curve and the benefits of cardiac health in alcohol.
Yep.
So when you talk about better for you, that's a mantle that we owned at one point.
Yep.
We own that outright, and that's why, by the way, that's one of the reasons why spirits started to premiumize later in the 90s, is because wine was taking away share. We've flat out, we've gotten lazy. We lived on that premise, and our current consumers are still the older consumers, and they still believe that it's better for you.
There hasn't been a transfer of knowledge, and there hasn't been
That's
that
right.
same kind of, impact point of societal normative shared understanding that happened with the French paradox and the
That's
60
right.
Minutes coverage and what doctors were willing to talk about with health and heart healthy and red wine and Mediterranean diets and all these things.
And the anti-alc movement is very strong,
Yes.
and I have a chapter on there. If you haven't
Yeah.
read it
But
before, read
But I
it.
want to just say one thing, and I'm going to
Please.
disagree a little bit.
Absolutely disagree. I
Just for
appreciate
this,
that.
Go
for the
for it.
diversity of this panel. Look, I look at the calorie count on a bag of potato chips. I already feel guilty. If I want to enjoy a bottle of wine, I want to be able to indulge and enjoy. One of the things that the pandemic did teach a lot of us is living for today and really appreciating and enjoying life for today. If we start calorie counting every single thing and putting health benefits on every single thing, it's like it creates fear among people. So I don't disagree that it's important to be very, very transparent and to have everything available for people so that way they know what's in the bottle. I do agree with that. What I don't agree with is putting calories on everything. Then it's like, how can you ever enjoy anything? Don't you ever want to enjoy something and not have to feel guilty about it? This is wine. It's a
wine-
lifestyle.
And I think that's at one end of the spectrum, Philana, but when you think about if seltzer's winning the better for you race and communication and mind share.
Seltzer's not better for you.
Well,
But
it's,
seltzer
well, the
is
interesting
on,
part
I don't
it
think
might
it
be on the
is.
decline, though. I mean, I actually like to look at some data. I think seltzer is actually
it's having a
it's
hard
flattening.
time.
yeah,
but
it's on the
still,
decline. So I would actually
to talk about your,
Yeah.
or to answer
Yeah.
your question of, don't people just want to indulge and not have to worry about
Right.
calorie count? There is a time and place for that, absolutely. Seltzer is 100 calories per
can.
session, right? Per can.
Right.
You get your 5% alcohol, 100 calories, and people aren't drinking one can of that. People are drinking many. It's about sessionability. It's about occasion. It's about, and that ends up being, either buzz for the buck, and that's where spirits are getting us,
Yep.
right? With all of the, highly affordable, high octane activities, or it's about sessionability. I want to be able to have a beverage in my hand the entire time I'm at this, pool party or hanging out on the lawn watching a concert, but I don't want to get drunk, so I'm drinking a 5%. And seltzer did a really good job of saying 5%, 100 calories. By the end of that, you don't realize that you've been better off just drinking one bottle of wine and you'd have half the calorie
And
count.
so
they're also
So
mixing
it's,
seltzer.
it's
They're also
interesting.
mixing seltzer with
Oh,
other
they're
things
topping
too.
it off with
Yeah,
the spirits, so
okay.
they're winning together.
Putting vodka- putting
which is
vodka in it.
increasing more calories.
Yeah, so
They're
seltzer,
winning together.
Seltzer is one important thing that I think we should remind ourselves of. I don't think we've talked about it, which is when we talk about all this stuff before about the younger consumers were not engaging and the older ones are still growing. Those are sweeping generalizations, right?
Right.
There are differences in each. It's people, right? And so when you look at people, when you look at the younger consumer, it's like they are drinking wine. They've tried
course
wine,
they are.
and so. The data that I've seen shows right now, I don't think I finished my thought, that the younger consumer is buying, when they do buy wine, they buy the most expensive bottle of all the cohorts. And I won't get into which cohorts, but just say younger. They buy the most expensive bottle versus the older consumers who are buying a case. And so, you think, well, that's encouraging, and it is. But what they're doing is they're buying for special occasions. So occasions is the thing. My friend Dale Stratton has been saying this for at least a decade, and I never quite grasped it. He's smarter than me.
One of the three wise men.
Yeah. And so he said
Danny.
it's about occasions, and the spiked seltzer category has done a great job of saying, look, you can take this on the road, you can put it here in a picnic basket, you can take it to a concert, blah 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 blah. And so they're increasing occasions for that product, and they've done a fantastic job at it. How have we increased occasions? And to my point, it's not necessarily bringing consumers who have never tried wine into the wine category. It's convincing those ones that are infrequent or, only using it now for special occasions to come into the category as more regular wine drinkers. It's boosting that component of it up. That's the part where we can actually win. Now let's go back to slide 11 for a moment, because we got off the track of on-ramps.
Yeah.
So, as I say,
We're all passionate here about it,
yeah, well, I certainly am. Yeah.
which is important.
This is from Schenken Impact Data Bank, and this is total alcohol beverage advertising spend, and it does include pretty much everything. It's comprehensive view: TV, radio, web, online, mobile, magazines, a lot of stuff. So it's rather comprehensive. And somebody else had a data point. I think it was you, Paul, about that it resonated with another piece of information you had: 5% spend.
Yeah, if you look at some of the publicly traded wine companies in the world, they all map to that 5%. You can back it out of their publicly traded data.
So on-ramping is, the very first thing you would, most people I would think would say, hey, if your category is starting to fall apart, maybe you should advertise. maybe that's a good idea. And when you look at what our category is doing, we're just totally outspent by beer and spirits. And you can say, well, there's reasons for it, but we can't make excuses. We've got to find ways to promote, whether it's by web, whether it's, it doesn't have to be national television, but there's got to be ways to promote. Now, I'm going to make a quick sidebar, because last year I spent a lot of time talking about Wine Ramp, which was a USDA marketing order that me, Danny Brager, Dale Stratton, and MJ Dale we were all volunteering, trying to put some leadership behind the industry to find ways that we could collectively advertise and change this message up for a young consumer. And we had the money raised pretty much across the board. And after we announced it last year at this is the reason I'm addressing it here again. After we announced it at this session, some parties that hadn't really been active and engaged really were vehemently opposed to it, and they started to talk to others, and pretty soon the weight of opinion fell away from doing a USDA marketing order. And the biggest issue was of a mandatory assessment. That was the biggest issue. The group eventually said, nah, mandatory assessment is going to work. Okay, fine. So that's the vote. We will not do collective advertising as an industry. We can't do that. We've tried. By the way, we did do it in the 80s. And fascinating, the reason we did it in the 80s was because the consumer that was back then, it was a spirits and a beer consumer, was only drinking wine for special occasions. So that's kind of where the Wine Market Council came up, is that John Gillespie was not involved with there wasn't even around, but John was actually leading the charge, and the campaign slogan kind of was wine, what are you saving it for? And whether it was totally due to that USDA marketing order or a portion of it was, that after that things turned around. So as a category on-ramp, advertising in a collective way is out. That's not going to happen. My opinion is that we need to each, if that's the case, whether you want to, maybe regions like Livermore Valley has got together. I think Santa Barbara's another one.
Yep.
And they're doing some regional stuff together. That's the way they're sorting that out. But I think every single winery has got to find how you're going to on-ramp new consumers. And to the very high-end consumers, that are $100, $200, $300, $4,000 a bottle, are you going to market to a 21-year-old? It may not be where you want to go, but
No.
But you do have an oncoming. You have to identify who that oncoming consumer is for your brand, and you've got to market to them. You've got to engage where that consumer is. You can't wait and put the balloons on the mailbox and expect the consumers to come in. We have to be better than that. And you actually had about consumer on-ramps, Paul. You had some points about the way that we are using the interwebs to attract consumers right now.
Well, I think that's the struggle. If you go to slide 25, which I think is really important, and this is something that we discussed in years past, which is the trend line that we had from e-commerce went from 0 to, what is it, I think 9%, is that 25? I can't see, my glasses aren't on, but, and then I predicted it would continue to grow, right? And unfortunately, we retracted. And a lot of people are attributing to the fact that we went to real world life, that we went back and we drank in public and we became communal again. That is actually factual as well. But really, when you look at the actual math of what happened behind the scenes in e-commerce, last year we only had 11% of big commerces, of the report they just released yesterday, 11% new customers. So if you look at how much people tried it or did not buy, that's not growth in the. That means that we're not attracting new customers vis-a-vis e-commerce.
It's nice to have repeat customers.
Right. It's nice. So essentially, they're selling 89% of e-commerce to repeat customers. Right. Similarly, in Commerce 7, they had 16% of new customers. Mm-hmm. Right. So if you look at how many of that, we need a larger growth factor. It's not people that just came and landed on our site because they read a press release or landed on our site because they got a good critic review. We need to actively be able to acquire new customers in Boston and Austin, in Florida, in Alaska, and that's where we haven't gained the skill set yet. So even though we tuned up our tools,
especially for the smaller wineries.
For big wineries too. Big wineries are everybody.
Huge opportunity.
Everybody. I know big wineries are making hundreds of thousands of dollars in e-commerce sales. That the wine is more expensive than it is in the market. You can walk into any Target, any Safeway, and they're still selling it online. They're doing a great job. There's some of the best online marketers that do a much better job out there. And we have some stars finally in the industry, but that's a place that we did a great job up-leveling our systems from COVID, right? We have better e-commerce. Yep. We have great systems like Commerce 7, Shopify have really improved their tools in big ways. Smaller suppliers like Vino Sugar made it easier for little producers to do licensing. We got a good foundation of our house. We have not yet learned how to attract and buy new customers, get them, whether it's advertising, whether it is social media. I don't care what avenue. We have not solved that problem yet, and that's why we've went down in our sales.
Yeah, and to back up your point, in the data that we have from the survey data, the larger wineries are the ones that are growing the most right now in online. So they
have the resources. They're hiring people. They're spending the money. They're testing
investing.
out. They're failing forward.
They also have the smallest base.
What's that?
They also have the smallest base. So
yeah, exactly. It's easy to fall or grow up from the floor, right?
Yeah.
Is the old saying.
And one of the solutions that I've advocated for a long time, and there are a couple that have done it. I mean, one was back a long time ago. I was talking about taking the experience on the road, and there are a couple now that have multi-level marketing type organizations where they actually have people in different regions that are representing their brand. When you look at the small winery in particular, what you see right now as a business model is, well, by the way, in 70% of the average small winery, 70% sales go direct now. And what you see as the business model largely is we expect people to come to the winery, and when they get to the winery, we sign them up for the club. We keep them for 30 months, and then we repeat, rinse. And as I say often, what industry would actually expect you to come to their cash register only, right?
Right.
As I use Detroit all the time. You wouldn't want to Detroit if they just said, look, you got to come to Detroit to pick up your car. You say you're out of your minds. That's an opportunity, though, because I think if it was me, if I owned a winery, one of the first things I'd do, because it's not that hard and it's not that expensive, is I'd look at the distribution of my club members, and I'm going to find there's pockets in the United States somewhere where for whatever reason there is this group, and now I find somebody that's local that wants to earn money on the side, and I have them set up experiences. I start to pay them based upon delivering their customers in their area to the club for direct sales. I start compensating them that way. It's a part-time job. It's a gig economy. I know it can work. I don't know of anybody that's doing it.
It's
There's
happening.
some
It's
people doing it,
happening
actually.
readily
There are.
in both from larger producers and smaller producers in targeted areas, and it's been happening for years. I mean,
good. Somebody
decades where
listened?
people
It is.
maybe they listened, maybe
Maybe they came
were
it up
all,
themselves, who
Yeah,
knows?
but I think
Yeah.
it's we see that we've seen that for years. Small producers will find that hey, I have a lot of club members in Arizona. Hey, let's find out the country club most of them are at, and then you do a wine dinner there, and then you sign more people up for the club, and then you
Do geomarketing
allow
and
for.
I do
so
know
this-
that there's a lot of
yeah.
people that are doing the walk-arounds, whatever you call them, the drive-arounds. They stop and do some of those kind of events too.
Well, here's
Country
one
clubs,
thing that
whatever.
hasn't changed is experiences. People still want an experience, and being able to invest in the experience, whether it's digital or
Right.
physical, or is important. And being able to enhance that experience is what people are looking for, and that's where we need to invest more as an industry, but also together.
Right. That's a great question that came from Tracy Sweeney from Treasury. She asked, do you see changes in demand for luxury tasting room experiences in the near term and long term? What are the commercial trends for DTC? Echoing all of the kind of attack media that's going on about Napa being overpriced, Napa being overexperienced, Sonoma being overexperienced now. I'll let you guys answer. I'll kind of wave it out to you now. I just pass it on hot.
There's a lot. Well, I'll start with the media portion of things. The media is smart, and headlines get clicks, and
Yep.
clicks get readers.
Yep.
So sometimes unfortunate headlines hit, so people click in and want to read more. Not everything you read is true, Paul. So I just want to let you know.
I've
Not
heard-
everything you read on the internet is true.
Interwebs, I agree with that
true.
2,000% as someone that, yes.
But when we think about and look at what our trends are in tasting rooms and visitation and the ebb and flow of that, it always is going to ebb and flow, right? To Rob's point, it is really unbelievable that we are an industry so, again, inward focused that we're demanding people come to us. Now it's a beautiful experience. I had a wonderful weekend celebrating my sister's birthday this past weekend in wine country. It was fantastic, and it was an experience. However, that's not the norm, and that's not going to increase occasion and usage. That's a special activity,
Right.
but we should be aware of what types of engagement at the tasting rooms where people are always going to be coming in and going out, so that individual tasting rooms can understand what does engage a consumer. How do you actually interact and gain information? We've talked about this for several years, that is the best free research that you have.
Yeah,
so if
ask-
you have a
ask your
tasting room and you are
customers.
running it, ask your customers, when are you drinking? What would allow you to make this easier or to have more? I mean, these
They'll
are
help.
simple things that you
Right.
can get from those
Yeah.
consumers that are right there
I
at your doorstep.
think the other problem that we're dealing with is when, as an example, looking at Napa, people say, well, it's too expensive. Well, it's not too expensive for everybody. Napa's doing quite well, and they're one of the top growing areas of the entire world. And so when you look at that, yeah, they sell to wealthy people. A lot of their wines.
Or special occasion people that are saving their money to do a special thing. Let's be clear.
Exactly.
Special.
Anniversary trip.
And I don't think
But
anybody
it
needs
also
to
drives tourism, which is important for the economy.
and I don't think anybody needs to apologize for their price. I don't think
not at all.
that's the point. Why don't we pull up what was it, slide?
Also, wineries are facing, you
19,
have
please.
high costs when it comes to everything that goes to a tasting room. I mean, owning and operating a tasting room is not inexpensive.
yeah, we'll try to talk about cost at some point here pretty quick.
The
But
dry goods, there's been a lot of questions about dry goods, by the way.
so this is again from this database from Sobo Ship Compliant, put together by Customer Vineyard, and this is prices of these regions. And so you look over time, and actually the price hadn't gone up really until lately, and Napa's more expensive. Okay, well, is that bad? And I would say no. And I guarantee you that if they hit a point that it's not going to work, then you see the average price drop a little bit. But just like cratering the price isn't the answer. The answer overall for what we're talking about for let's call it slackening consumer demand, it's to understand what value means. Value isn't just price. It's not just quality over price, right? It's all the things that define the experience included. So I used to say it's quality plus experience over price. One of my clients corrected me once, and he said it's perceived quality.
Yes.
And I said, okay, I'll go with that. Plus experience. So when you think of that, that formula, you could, if you increase your price, you decrease your value because it's on the bottom. If you increase your experience, you increase your value because it's on the top. So rather than being apologists for what we charge, I mean, let's, you know, when I look at the industry, nobody's making a lot of, I shouldn't say nobody, but it's an expensive business. It takes a lot of capital. It's a hard business. So, you know, people aren't largely killing it from that standpoint. But the focus has to be on what else we're delivering for the bottle. And by the way, the bottle price, what you get in the winery might very well be different than what you get in the grocery store, because you are putting overhead from that experience when when you come to the winery.
And nobody seems to flinch on that at all. That, you know, if you have a wine that's distributed, well distributed in either fine wine retail or at grocery or even in restaurants, that when they go to the actual site, to the winery, to the tasting room, I think consumers expect, you know, that's the case.
I also want to just kind of point this out. I mean, we've been doing this for a long time. They're called ambassadors. We have wine dinners across the country. People, you know, you have wineries, and they're doing actually an excellent job. A lot of fine wineries are doing an excellent job getting the word out, doing wine dinners across the country, getting people to the tasting room. They know where their people are coming from. They know where to go. I actually, you know, I give them a lot more credit. I give this fine wine industry a lot more credit because they do know where their customer is coming from, right? Now, targeting that younger consumer, I understand. But people are also living for today. Again, they want to drink now. They don't want to hold it and cellar it for a long time.
Right.
We talked about this last night, Rob, right? A lot of times they don't have the room to cellar it, right? If you're a young person growing up in the business, right?
You can't
You have
build
a
a
small
cellar.
apartment, you can't do it.
Yeah.
But they are interested and they are drinking more wine. They're just drinking differently and better.
I can't say they're drinking more. I'd say that they're drinking less, but they're drinking the one bottle, and it looks very much like it did in the 80s before we had the last USDA marketing year. They're drinking for special occasions. We've got to do a better job.
Can we pull up slide 16 if you don't mind? I think we've got a lot of questions about dry goods.
You know, I was just going to almost go there.
16.
Go ahead.
No, I'll let you lead. It's obviously expensive. It's tough out there.
Yeah. So one of the questions, you know, we asked is, well, let's go to 15 first if we can, Pierce. So we asked this in the survey. You know, where are you seeing the pinch in supply chain? And obviously glass. That, you know, that was the big one. But you know, it's across the board. And of course, when you have these pinches, then we have price problems. And boy, some of the supply problems I heard about. Especially during the pandemic component of this situation, was you know, really like we can't bottle. You know, we don't have capsules to put on our finished bottles. You know, so we're just gonna have to store them for a while. You know, a lot of stories about that. And then Pierce, if we can just move to 16 now, please. Thank you. So this is just data that I pulled off the interwebs, and you can see what's happening on the ground parcel rate index. This is somebody else that puts that together, and you know, versus CPI. So it's followed CPI, but right now the shipping costs are just dynamically higher. And you know, you want to go back and you say, well, it's fuel. You got a fuel surcharge. You got blah blah blah. But you know, fuel is back down from where it was, and it's not going to change your shipping costs. So handling those is a question. If you're going direct, you know, those shipping costs are an issue.
Well, shipping costs, though, it's availability of truck or rail and labor that's
Yeah.
causing those costs. So there's still a lack of supply for the demand that's out there. So how do you find that point? You continue to raise price until you stop getting the customer to want to ship the goods. I mean, we are still, I mean, remember,
We're still
while we
recovering.
feel like we're kind of out of the pandemic, the ripple effect of the implications of supply chains, the cost of, you know, items, the lack of inventory, the disruption that was there will have a lasting effect for quite some time still.
Yeah.
So we are continuing to see that, and that's what I think that last slide really does.
Well, if
We'll
you
see
look-
some
you look-
pinches from
Accentuate.
fuel from the Ukraine. We still have problems
Yes.
with right now
Yeah.
with China with
Right,
glass.
we didn't even get out of the pandemic,
Yeah.
and then we have all these other
We have
global
those
impacts that are
compounding global
continuing.
impacts. So the pandemic was a
Absolutely.
running tragedy, I'd say.
Well, if you look at what the Fed said it back then, they were talking about transitory inflation. That some of this stuff, because of the supply chain, would unwind as we started to. And what we find is maybe not surprising to a lot of people, price is sticky. We used to say, economists say it's slippery up, sticky down. And that's what we're seeing. How much of this is actually transitory still remains to be seen. And so we don't really know where interest rates are truly headed. I'd like to see them drop personally, but certainly normalized from an inverted yield curve that we're dealing with right now. And things are more expensive. Glass producer price index on that slide 16 on the right side, you can see what's happened over the last period. So I guess that's 20 and 21 pretty much.
Right. And then you go to 17, the next slide is, again, us taking a look at the cost of business that's increasing, right? And what's happening in what areas. And when you really think about where the most business limiting, potential opportunities are, you're looking about cost of obtaining insurance because of climate change and what's happening. And if you can't get that, that's a business limiter that puts you in a spot that can't move forward. But I love even the next slide, 18. Then
don't use all of our slides.
I'm not going to use all our slides. I'm just saying
we'll run out of things to talk about.
It's a terrific flow, because then this really probably gets upon the questions that we might be seeing coming through, which is what are you forecasting that you hope you can have your bottle price increase? Yeah. And it is a reflection of, we as an industry tend to not only look insular, we're also slow moving. And when the impact of the pandemic and supply chain and cost were rising, we saw those pretty readily transferring to shelf in every other segment of the grocery store. We'll just go grocery right now.
Grocery and drug.
Everywhere in drug and grocery, anywhere you had to go, you saw that happen. You saw the price of milk go skyrocket. You saw meat. You saw dry goods.
And then the smaller wine,
held.
The smaller wine component of it was actually discounting shipping costs and discounting the wine to get sales.
And then we held price, and now it's not going back to how it was, folks, right? It's never going to be how it was. And the industry is finally here on that slide. You could see not only hope is not a strategy, but we are actually seeing price increases taking place, whether that is a true increase that's happening specifically at shelf because FOB prices have gone up, or shallowing out of deals, or just the way that the conversations around everybody's cost of business, everybody being squeezed from every angle, from your supply chain, your dry goods, out to delivery and service at shelf and labor, it is causing it. And while this is showing that, yes, many expect and are hoping these bottle price increases can happen, we're already starting to see it.
Well, the top 100 brands in IRI, top wine brands, 95 out of 100 have all gone up in price.
Yeah.
So the data is already there.
It's a lot easier in an inflationary environment to raise price. Now that said, all the data that I've looked at suggests that on the whole, we're not really recovering our inflationary costs.
No, we're not keeping up because we were so slow to move at all.
So the real income that we're generating isn't quite there.
Right.
And I want to underscore here, this is what this says is that I think 47% expect to increase prices in 2023.
Yep.
And when you look back, how much they're going to increase, it's a small amount. So it's nobody's going to try to just throw, and a lot of people are thinking through, well, what happens if we have a recession, and that's part of that play that comes back. Hey, let's go back, because I know that there's a lot of questions that are coming through. Paul just mentioned it about climate change, and so that's slide 17.
Yeah, a lot of those.
Go backwards to that.
We've had around DTC. Someone asked Jennifer Becker, well, what is the meaning of climate change with DTC? How's that? How do we think about it?
Well, when you look at slide 17, let me look at a bigger one that I have in front of me because my eyes aren't that good.
Yeah, I had the same problem.
Yeah.
Yeah. I'm the young though, 30 to 50, right? So.
You're on the cusp, actually.
So 53% of the respondents in our survey said that they had a meaningful change in their business from a moderate impact, put it that way, from climate change. Now, what does that mean? We didn't go into the details of it, but when you start thinking through smoke, fires, drought, flood, it's probably not too hard to find a lot where people can say, yeah, well, Smoke, your tasting rooms are closed. That would be certainly at least a moderate impact. On the left side, you can see insurance, and I think this is a good slide too, because in the press, as Amy said earlier, sometimes you like to put, if it bleeds, it leads. You're putting the ugly data out there to get clicks.
Yep.
It is a big deal. I mean, 3% of the respondents to this survey couldn't get insurance at all. And so, that really limits what you can do as a business. You've got to get your bank to cooperate with you if you have debt, or if you have no debt, then maybe you can get by okay. But that's an issue, and the costs of insurance, where it's gone for my customer base, it's really absurd. It's like 10x, 50x increases in costs. Tens and tens of thousands of dollars of higher cost for property insurance.
Yep.
Yeah.
Well, and that says what, 39% have an increase in premium and a decrease in coverage.
Right.
So you're paying more but getting less protection.
Right. So that's
bargain.
That's right. So that's probably where the discussion is. I think if we had the discussion around what's happening from that increase versus decrease in what they're paying, if we focused around that, then with our insurance commissioners state by state, then we'd probably have success with that 3% that can't.
Right.
That can't get insurance. But that's certainly another one of those costs that are increasing, besides glass, besides cardboard, besides capsules, besides barrels, besides everything.
Yeah, right.
Labor.
Oh yeah, we didn't even
Labor.
talk about labor. Yeah,
And shortage of labor as well.
Yeah, shortage of labor and labor, and that was on the that one slide on the sentiment index. Labor was one of the things that people were concerned about, and coming out of this pandemic, when we had the lockdowns, with a lot of the hospitality staff in restaurants and the premium wine side were laid off, and so what happens? Well, they go back and they live with their parents in many cases. They got to. Some of them moved out of state, and then when you started to try to find people again, how do we get these people? You discover they're not there anymore. You can't just go back and rehire. And now you got training issues to deal with, because that learning that people had is vanished to someplace else. Many times they've gone into just totally new careers. We see that in restaurants still. I was looking something for the National Restaurant Association just the other day, and they were reporting, I think the number was about 10% less open hours for restaurants on average in the United States still. And it has to do with staffing. Certainly you see that in the tasting rooms. And so it's not just how much you're paying, and this is just talking about tasting room as an example, but it's, can you find them?
Well, it's also consistency. I mean, if you have a shortage of labor, you cannot consistently be open, right? So when you have someone come into your tasting room and you're closed on a random Wednesday because you can't get labor, that's going to affect it. So we do. I mean, that's a big issue, especially in the wine industry. Is where did the labor go, and people moving out of state?
Yeah, labor from vineyard to production to tasting room. So
Yeah.
end to end, there's obviously labor constraints, lack of availability, concern, and rising increased costs to obtain, hold, and to get appropriate coverage for that labor.
Let's go to slide 26 just for 1 second, because we started to talk about restaurants just a little bit. So this is from Nielsen CGA, and it is annual changes in sales per restaurant. Now, this isn't the industry as a whole, because you have to factor the way these guys do their math is they're figuring out by the number of open restaurants. And the data that I've seen through SipSource shows that still 10%, I think it was 10% of restaurants, I could be a little off on that, but we haven't gotten back to where we were in 2019 in terms of open accounts. And so, what you see by this is by 2022, at least in terms of open accounts, restaurants are back by it, but the increase in costs in restaurants is pretty phenomenal. Anybody that's been out for a nice dinner certainly goes through through sticker shock, and you see the same thing in the small wineries. They're having to deal with those cost increases, and they're not able to pass them on. When you look at restaurants, I think it's that we can get back and talk about demand for a second. What are West wants? What are restaurants doing with the wine list? Well, in the premium categories, in the white tablecloth restaurants, the premium wineries actually did pretty good getting back into those restaurants. Had good success. The higher production wineries, they didn't have that success. Why is that? Is it because the restaurants are just mean, or profitability is a part of it, but you see it in demand, and you see it just in front of you when you walk into most restaurants now, and you get a beverage list, and the beverage list is we got to share now. It's a physical way of seeing how we are losing market share to other categories, and so it's like a third wineries, it's a third beer, it's a third
cocktails.
Yes, craft cocktails.
Yeah, I think it is a really interesting point, and we witnessed it last night as we sat down. The steakhouse that we were in last night, you would have expected that we would have gotten a large captain's book of great, beautiful wine list. And while they had a beautiful visual wine cellar, the selection was less than a page.
Yeah.
And so I think you're exactly right. I mean, restaurants are open again, they're back, but they are limiting their selection,
For sure.
right? And we have to remember the wine industry is the most diversified consumer products good category out there.
Without question.
There's more options and more choice and
more price points.
Yeah, more price points than in any other industry. Yeah. And so we're already starting with an abundance of everything. And what we're seeing post pandemic is that people are becoming, they're limiting their options, their choices, because they recognize as an operator, a restaurant can make as much and sometimes more by carrying less inventory of a more curated list. And that means there's less available spots for share within wine and wine brands. We're also seeing, we haven't talked about it at all, but we're also seeing a lot of private label owned brands coming out.
That's a great point.
Because the retailer and the restaurateur are looking for increased margin opportunities.
Absolutely.
And that's a way to do it with own brand labeling.
Do I understand, did I get the wrap signal? Is that what I got?
Already.
I'm not ready to end. There's way too much to talk about. In the slide deck, which we'll make available to everybody, you'll find stuff on visitation. We got some really nice data from Community Benchmarks. They're a fantastic organization that's doing daily metrics for the wine industry, and it's fascinating to see the decline in visitation this summer. Now, I personally am not worried about that. I just wanted to make that. I think it has to do with the fact that 2021 was so good for the premium industry, and it was really hard to compete in 2022. It's a tough comp.
A lot of people comp to 19 still to understand where the real trend is, because 20 with the pandemic, 21, 22. Eventually, we're going to have to come back and do a year-on-year real look. But
23 and 22 will
And
be
by
the
the way,
big year. 23 and 22. That will be the real year.
We're lower on visitation from 19.
Yeah.
But again, I still don't worry about it because of the this is from pandemic, of the increase in by appointment tasting. So
Right.
we went away from
accessibility again. It's
Right.
on ramp.
And
Right, so
experience.
that loses. Anyway,
And experience.
But to wrap that up, I mean, we're walking down the streets of Napa. You and I both live there. The streets are full.
don't tell
Friday,
don't
Sunday.
tell anybody I live in Napa. They're going to egg my house.
Sorry, okay. His address is, sorry.
The streets are full. There's in the report and also in the data deck, there's some benchmarking. The premium side of the industry was up 18%. It's still up about 9% this year so far through 9 months. So premium side's doing good. Let's get through the other stuff. So the report and the replay of the virtual event will be available on svb.com and shared to all the registrants this week. You'll be able to get the report. You'll be able to get if you signed up, you'll be able to get. Obviously, you have to sign up to get it, but you'll get the report. You'll get the link to the site. Be able to download the report, download the slide deck. And then also look at the replay if you wanted to criticize what all the things that we said. You can actually see them again. With that, though, I wanted to thank Philana and Amy and Paul for being just a great panel. I'm really proud of the work that we've done on this report this year. I'm really proud of the industry from the standpoint of its resiliency. I don't think there's ever been a more difficult time to do business than right now, and I don't see anybody whining about it. People are just digging in and working hard. So that needs to be said too. We have a heck of a business to be involved in. I really encourage leadership in this industry to come through with some suggestions and stop the whole denying of what's happening. We can't just wait. Hope is not a strategy. We've got to engage younger consumers. We've got to take those occasions and increase them with those younger consumers. That's what we have to do to see that rising tide again.
Well, I think you can, instead of people taking
this was supposed to be a wrap, though.
Oh, sorry. I was going to
It's
close
like
up.
the
I want to
Oscars.
close up with you saying
It's like the Oscars when they play the music in the background.
Yeah,
and
wrap
you're
it
gonna
up. Oftentimes people take this as a doom and gloom because you're telling them. I want to counter that for you as you close up here, Rob, to say we have an opportunity to do better. It's an opportunity. There's only up from here, not down if we do our job. That's
plenty of opportunity in so many different ways. We have to work together to find those ways, and we have to be better. We have to be better, and I believe we can.
Well, it's important to be optimistic. And also understanding the data as well. So that's the most important.
They go in hand.
We always come
they go
together in the wine industry.
So with that, I will say thank you, everybody, for tuning in. I appreciate your time here today. If you have questions, we'll, of course, take those questions as well. At some point, you can get to us. Otherwise, thank you again for your time. We look forward to seeing you at Silicon Valley Bank next time.